Welcome to Markets Now. I'm Michelle Roque with Dave Chatterton with Strategic Farm Marketing, and we are seeing mostly higher prices over in the grains this morning, just barely. Livestock futures are mixed. Cattle setting back, hogs to the plus side. So, Dave, we've had a nice run here in terms of the grain market. You know, how much of this has just been fund short covering, or what is driving the buying interest, do you think?
Yeah, Michelle, I think it's been a combination of a number of things. So certainly the funds have been active here. We have seen them cover some of these short positions that they've carried. It seems like, the majority of the year, but those positions still remain, I guess, large net shorts by historical standards. I think when you look at what's happened, our export volume has ticked up a little bit. We're finally starting to see some more flash sales come through. Our weekly totals have been good. We've been mostly competitive here in terms of corn and in soybeans. And, China has stepped up just a little bit. That's helping the process move along here. At the same time, ideas on yields aren't necessarily crashing by any means. Michelle, I wouldn't give you that idea, but I think they've come off of that peak or maybe that apex that, that was talked about, 3, 4, 5, 6 weeks ago. And we're backing up a little bit in our area. We've got some early harvest going on. Those yield reports tend to be pretty good still on corn, a little bit more questionable on beans, although it's very, very early in the process. But I think what we're going to end up with is a crop that's very good. The challenge is a record in our part of the world, but maybe not some of the ideas that we talked about early in the year. So all of those things kind of put together have allowed us to kind of hopefully try and carve out a little bit of a seasonal low. But the ability to maintain that altitude and to rally from here, I think going forward, we've got a key USDA report coming up next week. And of course, we're keeping our eye on South American weather. We've got some more low water in store for the Mississippi River. So certainly some challenges ahead to maintaining any kind of a rally.
Yeah. Plus, how much farmer selling are we getting on this rally that's capping the ability of this market to go up or will?
Yeah, it's funny. We were talking just in our office yesterday about the amount of offers that we hit yesterday on the rally. And we're still in a very defensive mindset in terms of prices and where they can go. And when the market, for soybeans, let's just say rallies 50 or 55 cents off that low, and corn 25, 30 cents, I think you have to be willing to hit the sell button on a little bit and just keep those incremental sales going. And in our part of the world, Michelle, I mean, still a very sloppy situation as we get ready to enter harvest. There's still old crop on the farm. We have some of our commercial elevators still holding a significant amount of inventory, and trying to figure out what they're going to do with that. We've got some elevators already putting out ground piles in anticipation of harvest. And then we've got a big crop coming in here in just a few weeks, or getting started in the next few weeks. So, it's still a very precarious, I think, situation. A lot of that may play out more so in the basis and the spread market on the cash side than it will in the futures side. But it's going to continue to add a little bit of pressure here as we go forward.
Yeah. So in your mind, do you think we're carving out seasonal lows here or not?
I do, Michelle. I guess the question is, where do we have to go on the upside? And we're certainly looking and trying to turn over some rocks to find that friendly news. But in a situation where our board prices rally and our river freight rates are going up, we're getting less competitive in terms of exports, at least out of the Gulf. I think we're watching what's happening in South America with a dry, pattern so far in Brazil, although it's early. If that extends and they have to delay their soybean planting, we have something to deal with. But at the end of the day, we got a USDA report out next week. And even if they were to cut the yields a little bit, we're still going to print some carryout levels that are very burdensome in terms of what our ending stocks are. And how we challenge that and get the demand to offtake that, I think, is where the trade is coming up short.
Yeah. So you think that yields are maybe coming down, or at least we have the biggest yield priced in, but how much would we have to come down on yield to really move the meter here on either corn or soybeans, Dave?
Yeah, I think you'd have to come down pretty significantly, Michelle. And then, even if we start shaving, 1, 2, 3 bushels off on corn, maybe a bushel or a bushel and a half on beans, you still left with carryouts that are above 2 billion on corn and probably, 450, 425 on soybeans. Still plenty of excess stocks. Now, that, maybe brings up the bottom a little bit from what we've been talking about, but I don't think it raises the ceiling a whole lot. I think we're going to have to wait for a bigger problem to develop in South America over the winter. And geopolitics and election years, always a very tough time to navigate markets. But, that aside, I think we're left dealing with what the overall picture just isn't changing that dramatically, even with some yield cuts, maybe potentially this month.
Yeah, and that's kind of true of demand as well. We've seen some demand coming to the market. Do you sense that China is going to continue to buy soybeans or other products from the U.S.? And what would we have to see there really to move the meter from a demand perspective?
Yeah, I mean, we continue to see these little flash sales. We had 2 cargoes yesterday. I got a USDA correction today with no flash sale. So we're moving the needle in the right direction. Just we need that volume to really pick up a little bit. China, if they're going to, let's just say, crush, 100 million, metric tons, they need to be importing, 2 million metric tons a week. And we haven't got our lion's share of that business. We do think, looking at the numbers, talking to our people in China, that they will be here and be more consistent buyers of U.S. soybeans, although on a spot basis. I don't think they're going to book for those forward numbers. So, that's the best thing maybe that we have going for us, I think, is that China will become a more consistent buyer and show up in our weekly totals and our daily flash sales. That's supportive. That helps get us to the numbers that the USDA is talking about. It doesn't necessarily help get us to a place where we can sustain a rally. So unless we see a very dramatic shift and China starts buying more than 2 million metric tons a week here in the next several weeks, I think we're getting back on course to where we want to be and confirming that seasonal low, but still lacking the reason to maybe rally the market in terms of price.
But we are competitive, aren't we, on both corn and soybeans against Brazil?
Mm-hmm.
I think we're a buck under their price right now on soybeans.
Yeah, for sure. And China looks like they're pretty well uncovered. They're buying right now for October, their November, December, January coverage, and into early February before that Brazilian crop becomes available. I don't think they have a choice but to buy from the U.S. How much they buy, we can go back and forth on. When we look at corn, we're getting in a little less competitive situation than we were. Our spread to, let's say, Brazil right now is probably only 8 to 10 cents a bushel. I think Ukrainian and Argentine origin can be bought below U.S. here at the moment, although there's a freight issue there. But if you look at the river projections, that Memphis gauge for the Mississippi River scheduled to go down another 2 feet over the next 2 weeks. That's going to take us very close to those record low levels from last year. That's pushing barge freight up at a time that we've seen the futures market rally, Michelle. And in doing so, we're getting a little bit less competitive. I felt better when we had a bigger spread going, for sure.
Absolutely. Do you get any sense, you said, it's dry in Brazil, maybe that will push back some of the planting, but do you get a sense that Brazilian, Argentina farmers are going to plant less overall because there's some discussion about maybe them pulling back a little bit for next year?
Yeah, I mean, a lot of talk. And when we talk to our sources down there, we're really expecting kind of a flat year in Brazil, maybe some very modest growth, but no more than 1% and likely less than that. That's a new phenomenon. We're used to this kind of 2.5%, 3.5% growth a year. And that's reflective of the economics of the situation on the farm currently. In Argentina, we've all seen the stories about a big switch, 5 million, hectares moving out of corn and likely into soybeans, or a majority of that into soybeans. So certainly a little bit more defensive nature. I think at some point that can help our corn situation particularly. But for right now, not a big acreage reduction by any means. I think we'll see a little bit of modest growth. It's just not going to be the numbers that we've been used to over the last 5, 6, 8 years.
Yeah, I know. There were some Argentina farmers at Farm Progress talking about less corn because of the leafhopper situation. So certainly that's something we'll keep a watch on. And Dave, you mentioned the report next week. I mean, is this typically a report where USDA makes big yield adjustments or not? Because this is their first objective surveys now, or their first objective field data, I should say, right?
Yeah, I mean, first rule at the USDA, never rule out anything, Michelle. And if you think their historical precedent, you're probably going to get your foot stepped on a little bit. So we'll see what they do. I mean, it's not typically a big moving report or a big month for them to move. Typically, they wait till October and then a little bit later in the year. But you never know. I mean, if I look at the crop condition ratings that they're putting out on a weekly basis, we did fall a little bit last week in soybeans, or the numbers that we had out yesterday afternoon. Corn was flat, but even with that fall in soybeans, we're still tied for the best rated crop, going into the month of September. So I think these ratings are supportive of the yields that the USDA has on the board. We're going to start those private yield estimates, I think, this afternoon with FC Stone, or StoneX, excuse me, and have more filtering out this week and early next week. So we'll get a little bit of a feel, but most of the private estimates have crept back a little bit. They haven't crept back by a lot. We would suspect that the USDA could make a few cuts, but I don't think they're going to be very aggressive or be, bullish in terms of what they do for the carryout or the balance sheet in terms of the U.S.
Yeah. One last question on grains. The stock market melting down yesterday. Was there some long positions being cashed out, maybe some short positions being cashed out over on the grain side? Is that an unwinding we could continue to see or not?
Yeah, for sure. And I think that's one thing that people don't talk enough about is when we look at these large funds that are kind of pushing our grain market around at times, we have to keep in mind that those funds have long tentacles. They're not just in one market. They're in a number of markets. They have a diversified portfolio between equities, financials, commodities, hard assets, whatever. And so, as you said, when one part's moving, they're adjusting other parts. And I think we saw that become support at the grains yesterday as those equity losses were piling up. We were seeing some profits taken or some positions on the short side of the fence in the grain be covered and create a little bit of buying. Now, today, we don't have that. We've got a flatter equity market, still not great, but I don't think we have that action here to work off of today. So certainly if nothing else, it's a little bit of the grease that moves the wheels here or keeps them moving cleanly.
Yeah, you got to wonder if a little bit of that liquidation may have been happening in the cattle market here as well. But, what's your sense? We've had a little bit of a recovery. Can we go back and retest the recent highs, or where do you see us going? Because we're past the biggest demand period anyways.
Yeah, a little bit concerned. It's going to be an interesting week here. We've gotten past the Labor Day holiday, as you mentioned. So the peak of, grilling demand or beef demand, we're kind of on the way down. These animal numbers continue to be high. Our slaughter number last week, highest in 10 weeks. We're going to have a slower week this week with the holiday, but certainly we're on pace to kind of keep that production number going higher. And Packers have some margin here. We'll call it, $40, $50 a head. That's great. I think they want to continue to leverage that by keeping the cash market in check or the live market in check while getting that beef market to stay stable or go up. And that's a dangerous slope here, I think, at this particular time. And it was interesting yesterday. I mean, I will give the cattle market a lot of credit in the face of that lower equity market. We kind of held our ground here and actually finished higher. We had a kind of a volatile two-sided session, but at the end of the day, we did that. Very quiet trade today. And I think there's a little head scratching going on here. The funds have not added to their length in cattle here in a few weeks in any significant way. And I think it's a little bit of a momentum pause. And, I like the direction we're headed. I just wish we had a little bit more momentum.
Yeah, no doubt. Hogs have had a nice breakout here on the charts anyways. The funds have piled in there, but can we keep going?
Yeah, I think that's the question. Can we repeat what's happened or build on what's happened, I should say, over the last 3 weeks? And I think that gets harder and harder as we go down the road here. And again, I think it has to do a lot with the margins on the Packer side and kind of where this thing is going to go. But, our production and slaughter numbers, down a little bit last week, but still roughly 1.7, 1.8, 2% above a year ago. And our export market is still slagging a little bit. So we have to find a home for this extra, production and where it's going to go. And, it's been an impressive run here. Funds very aggressive buyers last week and, came out and they were net short a few weeks ago and now they've been aggressive buyers. So, it's a market that's gained some attention here, but on any kind of a run like this, typically we'd be looking for a little bit of a softness and a little bit of a correction. I don't know that changes the trend, but I'd be cautious as a buyer at these particular levels.
Well, thanks so much. That's Dave Chatterton with Strategic Farm Marketing. That's Markets Now.